GetCrack. Wake up, motherfucker.
All right, what's up? Okay, let me see. Everything's good. All right, June 5th. All right, finally something happened. Oh man, I was worried we would have to wait until like freaking next Friday. Oh my god. Well, worst case, I have to wait until like the end of the month. Oh man. All right, we're done then. That was it. That was the bubble pop. We were all waiting for that. Okay, so probably that means the index is going to go sideways. So I'm going to show you the thumbnail. It's very important. That's why I put the thumbnail the way I did. Very important to understand the conditions we were in. So let me get that thing. And the warnings that there was going to be a potential dump. And I think that's it. That was it. That was it. Yeah, we're going to go over your CIFR point and figure, go over that. But like we were saying, June was going to be some kind of top. Late March was the bottom. June was the top. That was what the cycles were saying. And it was following that exactly. Now it's not all the time, it's always this perfect, but it gets pretty good when you get the cycles aligned this way. Very nice. Very nice. So we hit that day. We were right at the top of this picture. Does it mean like we're going to crash all the way into October? Probably not. Probably not that easy. It's going to go sideways then to August. We're going to go sideways to August, start sliding down into September, have a little bounce somewhere in between, trick people, crash hard into October. Then we'll have elections. Then the market will pop on the midterm elections. Probably something like that's going to happen. Like you can see here, we were going to have a dip right into March, but all it did was go sideways for the longest time. Um, and then it went into April, right? It's just like fuck, man. We got a drop. We barely got a drop. So it's gonna be one of those things where we're probably gonna go sideways. We're just gonna go sideways. Software, we got till July. So you got that dip before Oracle, man. I'm probably gonna take my profits from those. What was it? What the heck did I sell today? I mean, this week what was it CrowdStrike, Palo Alto Networks? Yeah. So those two ones, those two bad boys sold those into earnings, and those things didn't even dip much today. So it's like, what the hell, man? Do I have to just buy back cybersecurity? Fuck, because I definitely don't like what Palantir's doing. I can't pick that one. Cloudflare maybe, but Cloudflare is not really software. I guess it's more service. Oh man, okay. I'll have to start looking at all those software names again, see if which one I want to do for next week. Otherwise, yeah, you can't. It's probably a hard pick. Hard pick. Okay, so the thumbnail, right? So I have this panel here. Show you the top. Yeah, that's what the cycle said. Looks like we hit it. Here's the demarc. Okay, let's see. What was this? Sometime in June, right? Okay, we got June, start of June. So we got that C13, 13 count on the combo, C5 on the demarc there. We tried to go down yesterday, all right? We pop back up. It's like, well, you got to give me better than that. You got to give me better than that. I don't think this is it. If we're just going to go sideways to Oracle and then we dump on Oracle or SpaceX, I have to wait till next week. So, good thing we just dump right now. And actually, we were already dumping overnight. So, I was looking at the market while I was talking to you guys yesterday, and the market was already rolling over. I'm like, man, It still wants to go down. All you need is a little shove, and that thing will just fall off a cliff. And Korea, okay, Korea's doing something. Yeah, Korea. Yeah, keep going down, keep pushing it down. Was that enough? No, not really. It was just hanging at the bottom of yesterday's low. Need something else. I guess good jobs report does it. So this morning we had jobs report and it was good news. Oh man, it's just like COVID. COVID, we had unemployment data shoot up. It was bad news after bad news every week, and the market kept going up, and people got pissed. And it's like, bro, if the unemployment numbers are down, then the Fed will keep QE lower for longer. They'll keep the interest rates lower for longer. When you get good jobs news, then now the narrative is, oh, okay, maybe the new Fed can't be as dovish as Trump wants to be. Trump will probably tell him, yeah, you know what? I need the market to pump, man. I wonder what he's going to say. But that was enough to push everything down, right? It just needs a little shove. If Korea isn't going to help you anymore, it should be easy to shove everything down with the semiconductors, right? So you go through the cloud, you get down there, right here, you go right through the cloud today. So yeah, I shorted in the morning. I just did some Sox X. It was like, okay, you open here, you might as well open a short. You could day trade this. So you just day trade it, see how far you can get. And it goes right through the cloud, goes right through there, goes right to the bottom of this leg down here. So this is where you start thinking about buying again. So Monday morning, you're probably going to have to get ready to buy. You're going to buy for a trade. So this thing will probably roll right back up into here and struggle a lot. But that means we're just going to go sideways. We're probably just going to go sideways. If Oracle actually pukes and then sends everybody down, if SpaceX doesn't live up to the hype and people start thinking like, what the hell, man? The market doesn't want to be juiced up anymore, then yeah, it could Wednesday through Friday, you could probably see a continuation. But I think Monday through Wednesday morning, you can see a nice pop up. So this is very tradable on both directions. So once you got this move down here, you're gonna probably get a bounce back up, and then you can reshort it on Oracle. So if you think Oracle is gonna cause the markets to go down into SpaceX, you can short it there like Wednesday afternoon, or you could wait till Oracle reports and then try to short Thursday morning into Kevin Warsh if you don't believe in SpaceX doing anything at all. And this is the third panel. This is what we saw. July, right? July of 2024, we had this kind of condition. October 2025, and then June of now. So you knew there was going to be something happening. You just didn't know exactly what day. It could have been any of the days this month, any other days, right? You just don't know when. And now you got your pop, you're finished, you're done. So we don't have to worry anymore. We know where the range is now on the chart. You know where you're going to be. Okay? So that's it. You know exactly where you want to be. It's going to go sideways between 700 and 750. Back and forth on the QQQ right here. This is the QQQ. That's what it's going to do. Okay, you got it? All right, let me read your chats. Let's see what you got here. So here we go. Hey, what's up, Hurricane? What's up? What's up? What's up? What's up, y'all? All right. Okay, let's see. Blah, blah, blah. Scoop up. Okay, you want to scoop up some inverse ETFs? You're going to have to wait for the bounce. You have to wait for it to get towards 730 probably minimum. 730 before you start thinking about shorting it again. It's going to have to bounce. That's how it is. Yeah, well, you have to wait for the chart to tell you. This is not a crystal ball program. I'm not going to be one of those YouTubers that go around and keep saying oh, the market's going to crash today. The market's going to crash today. I could be one of those guys. I could keep going. Every day I'm going to say the market's going to crash. The market's going to crash. Eventually I'll be right. And then I'll just go back to that video and say like, see, I was right. And that's what everybody else does on YouTube. And then they'll delete all the other videos where they said that it was going to crash. Yeah. If I had a crystal ball, man, I'd be way richer. But this is why everything is a game of where you position yourself, right? You don't long in June. You long in April, right? April, late March into early April. That was the time to be seriously long. And then once you get to June, July, that's when you want to be short. That's when you want to be thinking about shorting. But for the short-term movements like this, I can't tell you anything. It's all just randomness to me. You don't know exactly when. But you saw some clues, right? We already saw some clues earlier this week that something is slowing down the movement. You already saw the weakness in Korea as well. Yeah. Yeah, and then gold, see, gold's going to die now. Gold should have went up into June, and now gold is going to go down now. Yeah, gold is done. Gold is done. It's over for gold. Gold had its chance. Gold could have followed the market up, but it didn't. Bitcoin had the chance to follow the market up, and it didn't. So unless there's like a big change when Kevin Warsh speaks, you're going sideways till down into August, and then it'll go real low after August. It's just going to follow everybody else. So it didn't follow the market up, but it's definitely going to follow the market down in August. SPY still dropping into the aftermarket, so we might not be done. Yeah, it's going until Monday, because the Asian markets will reopen. They have to catch up to what we trade today. That's why when you play Korea, it's dangerous, because Korean markets are closed when the market is starting to move down a lot, right? So the Koreans are going to catch up to us today. So whatever we did during the day today, they're going to catch up overnight on Sunday night. So yeah, it's probably going to go lower when they panic. They're going to freak out because the Koreans have pretty much went all into their bubble, right? All those boomers that cashed out of their life insurance and crazy. Yeah, they're going to panic. They're going to panic. I drew a downtrend line 2 month, 2 year from, and today kept left up and kissed it 2 year. You know, I'm gonna show you this. This is way more important now because Kevin Warsh is coming up. So this all changed this morning. So before the jobs report, I'm assuming, I don't know exactly if it was only just a jobs report, but everything here was flat, meaning that we were going to keep the same interest rates throughout most of 2026 into mid 2027, maybe for longer. So these are the probabilities, okay? So you can see like the next meeting, 96% probability, it's 350 to 375 basis points interest rate. Okay, so we keep the same interest rate. And then December, we're going to have a 42.3% chance that we're going to raise it by 25 basis points to 375 to 400, meaning that's 3.75 to 4.00 interest rate. That's the Fed's fund rate. Okay. And then now we have a second raise in April of 2027 to 4 and 4.25% interest. And then in October of 2027, it's a 30.1% chance we cut 25 basis points, 3.75 to 4% interest. So now it's changed. This whole curvature has changed. This is based on the futures market of the Fed funds rate. Okay. That's why if you just look at like the 2 year by itself and all that, you're not seeing this stuff here. This is probably way more important now. Way more important. Way more important. If you look at the sectors that matter for interest rates, they didn't crash today. I looked at real estate. I looked at utilities. I looked at banks. I looked at all the other ones like home construction. They kind of shrugged it off today. They shrugged it all off. The only thing that went down today were the large caps, really. Large cap techs and mostly just semiconductors. It was just mainly semiconductors. I think the semiconductors was already going to go down from last night. So last night it was already going down. And Korea wasn't helping, right, to keep it up. So it just needed an excuse to get pushed off the cliff. So I really don't know how much interest rates really matter right now for anything. It seems like underneath beyond the semiconductors, they kind of don't care still, which is very peculiar. Very peculiar. Only thing that cares is gold and silver. That's the only thing. Those things are very interest rate sensitive, and they didn't seem they yeah, I'm very curious. I wonder if one side of the market, you know, um, really believes in Kevin Warsh. Like they really think he's just gonna be Trump's puppet, and then the other side of the market kind of goes like, what, man?" Yeah, the other side of the market really believes that the Fed is independent. That's interesting. I wonder who's gonna be right. Who's really smart right now? Are the people that are buying real estate stocks, are those guys the smart ones? I'm really gonna have to pay attention to Fannie Mae and Freddie Mac too then. Like it seems like one side of the market are full of like Trump insiders and the other side of the market are full of morons. Huh. Strange. Really strange. Yeah, I can't figure that out. It really doesn't make much sense. Like you would think like home construction would have crashed hard. It's barely down 0.5%. Man, if they really think the Fed is going to be tough on interest rates, what's going on? Man, that's bizarre. Okay, biotech. Yeah, biotech went down. That makes sense though. It's part of the Nasdaq. So if the Nasdaq craps, it'll just follow that. But still, it already went down like on Tuesday a lot. And then it bounced and it came back down to the beginning. Like it's not a new low though. Not like semiconductors. That's strange. Yeah, that's really strange. So yeah, I'm just looking at it here. Yeah, I can't really make much sense of that. So I'm really wondering. I'm really curious. I think there's some big player out there that knows where to park their money for next year. That 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 really believes interest rates are not gonna really significantly go up. You do 2 rate hikes into next year. So one rate hike December and another rate hike in April. You would think nobody in their right mind would be buying banks, real estate, or any of those guys. Like that thing should have crashed hard today if that narrative was true. Yeah. Now I'm very suspicious. Very suspicious. All right. Next one. Maybe it's a pre-dump for IPO. Yeah, probably. That's what I'm guessing. Yeah. Yeah. Because it doesn't square the circle right now with me. Semiconductors going down, crashing because of Korea. That's a good narrative. That makes sense. Semiconductors going down because interest rates are going to go higher than what people expected. That is kind of more suspicious. It's like that narrative really doesn't make sense because then why are the other sectors that are even more interest rate sensitive not doing the same thing? They should have all crashed together. They didn't. Weird. Okay. Tropes, I think this pullback was designed to give us fuel for next week. Yeah, that's probably what's gonna happen. Unless last pullback when it said sold off. I'm hoping for like another 5% on Monday. You know? I mean, I hope the Koreans can really panic and really give us that. So Monday morning, it's gonna be a nice buy. But I gotta figure out what I want to buy though. Yeah, buying Oracle could be a good play. Like, it's the most risky play, but it could be the play that really gets you the most bang out of your buck in 3 days, right? Because even if you don't play the earnings, if Oracle just recovers a little bit and you do leverage, you could just get like a 20, 30, 40, 50% like run. Because even today, you shorted semiconductors, you got like a day trade was 20%. Like, imagine Oracle flying back up in 2 days. You could get out before earnings and make a quick trade. So that's why this environment is so good to practice, because you could do so many things, right? You could see like, oh, this is a good day trading type of environment. I'll do that. And then another time it's good for swing trading, right? If you did the HUT and the APLD CIFR from 2 weeks ago, 2 weeks you bought and held those stocks, you got like a really good 30%. And then if you did leverage, right, it was like 60, 70, 80. Like my HUT G was like 70, right? 80, 90%, depending on where you sold it. So there's a lot of opportunity to try to for you to see in the chart, for you to go like, okay, today was a good day to day trade. I could short this. And then next week you could be like, oh, today is a good day to day trade Oracle to go up. And then you know what I mean? It's like there, you could see it. And then at the same time, you could go like, well, now I could see like where the opportunity is to swing trade. I could swing trade 1 week, 2 weeks, right? Or several days, trading days. So if you're so flexible, that's what I want. Is like, I want people to be as flexible as they can. You can be an investor, you can be a swing trader, you can be a day trader, you can do all of them. Actually, most people don't. Most people are only good at one of them. That's usually the case. But if you learn how to read charts and you know how to understand conditions, that will be the best scenario for you, and then you can learn something. Unless the last pullback when I sold everything right as Brogy, and I'm gonna hold this one till dear life. I don't know. Yeah, you gotta. This one's gonna get crazy. I think we're gonna hit a lot of scenarios coming up. All right. Anyhow. Was that the I forgot. I mean, was that the options expiration going into VIX futures expiration? Was that week? I mean, that was the last time we had some semblance of volatility. That's it. Okay. Let me get some yeah, good. Yeah, you can do all of them together. You can do all of them together. One of the things you could probably do right now is if you can start making money trading throughout into next year, what you would do is like every time you make some profit, you start putting it into Fannie Mae and Freddie Mac. Like I said, like, dude, every time you just make a little profit, like, right? If you could make like $1,000 every trade, every trade $1,000 profit, right? Like, so if you got $1,000 and you could make like 50% to 100% on a swing trade, or if you do a bunch of little dinky day trades, right? Get like a few hundred here and there. Like, you can see which ones like you can make like you can really perfect. And then if you can do all of that together, every time you make like a K, right? You just go up to a K, you throw that $1,000 profit, you just throw it into like into Fannie Mae, Freddie Mac. Every time you make 1,000, buy that. You just dollar cost average Fannie Mae, Freddie Mac. Donald Trump already said it's going to be a trillion dollar company, right? All those two are going to be $1 trillion companies. That's a 27 bagger, 27 times to 54 times, and so you could do every time you make a K, man. If you could make like 50K off of trading, and then all your 50K is just split between Fannie Mae and Freddie Mac. That 50K, right? That's enough. That's enough to make some good wealth there after those two become trillion-dollar companies, right? Oh shit. Maybe that's what you should do. Like, I don't know. Yeah, if you just get 50K, let's see. Right? Like, man, that should be enough. Fuck, man, you could just make like a couple million on that then, right? Fuck. Maybe that's what you should do. I don't know. I don't know if that's like good financial advice here. I'm not a financial advisor. Disclaimer, don't listen to me about that plan, but hey, maybe that's a good strategy, right? We know there are Trump stocks. Trump has 2 more years after midterm elections, right? He still has 2 more years. So he actually says something might be important, then he'll do it. Oh shit. Yeah, maybe I should do that too. Maybe I'll do that. Fuck. I'll just keep trading, and then if I make like a few 100K, I'll just dump all of that into Fannie Mae and Freddie Mac. It sounds so stupid that it might just work. Dude. Sort of go. What's the best decision? Yeah, I don't think it's gonna be good for gold, man. If the way this whole Fed, you better pray for Kevin Warsh. You better pray Kevin Warsh does not say any more crazy hawkish things. He's gotta go dovish. Holy shit. So I don't know if semiconductor stocks are going to be attractive though. You know what I mean? Like the last time, the last 2 times you had semiconductors take big dips like this, it took many weeks to do anything. All this would do is like take the money out of semiconductors, and they have to go somewhere else. Go somewhere else. Go to software. Go anywhere, basically. Go somewhere else. Go back to communications. Maybe you can pump Meta or something. Did you guys hear that Meta is going to offer stocks just like Google did? So Google is offering stocks, new shares. Meta is going to follow and do the same thing. So I think a lot of these, Amazon might be next too, right? All these guys will go to the stock market and issue shares. They don't want to go to the bond market for their debt. They want to make you guys pay for it in your 401ks. That's what they're basically doing. The other announcement was that, let me see. Do I have any of that? No, I don't think I have that. But I don't know if you heard, like after I talked yesterday, the S&P 500, I guess, committee, those guys said, no, we're not going to make an exception for SpaceX or Anthropic or anybody like that to put their stock into the index. So S&P 500, no. That doesn't mean the NASDAQ 100 might not do it. So S&P 500 is out. We already know that some mutual funds already are going to put like SpaceX IPOs already in. They're already in there, or they're going to be in there very shortly in some mutual funds. So that's already in the works. So that doesn't mean like the NASDAQ 100 won't put it in either. And the other thing too is like the other ETFs might, that are based on other indices, they might not need to follow those rules anyhow. So they might want to shove it in there too. So we don't know yet. I wonder if that was the reason too that the market started dipping. Because like I said, it was already starting to roll over when it closed yesterday. So I was already seeing it. I don't know if their claims that the interest rates really caused this issue. I'm having big doubts now. I'm having bigger doubts more than ever. see. Could have been several G's richer had I not gotten rid of everything so soon. Yeah, you gotta. Yeah, you're gonna have to work on the whole psychology thing. Definitely, psychology is gonna mess with you, right? Mm-hmm. Let's see. Playing with small orders. Max I usually get is 2K. Should be only like 4 shares. And I feel like because with losses. Yeah, you should practice with small amounts at the beginning. Yeah. Because that's all about the psychology. All about that psychology. The more amounts of money, the more reckless you're gonna be. You're gonna turn into a gambler when you use more money, right? And that's based on that's based on your personality, but also based on the amount of money you actually have, right? To me, like maybe dropping 10 G's for a trade doesn't mean much, right? 10, 20, 30, 40. Somebody else, a few $100 seems like a lot of money, and your whole psychology really changes. So that's proportional. So you got to think about that for yourself. So when you practice, you should practice small, or otherwise just paper trade. But paper trade is like imperfect because you're not using real money, so you don't have that psychology, right? Yeah. Yep. So yeah, don't be reckless. Yeah, you started with the oil. Yep. Yeah, that was a good one. That was a good trade. That one was very nice and smooth for the most part. Very nice and smooth. All right. Okay. Caught up to all that stuff. Market in this, and now it's Joever Bubble Pop. Yeah, it's that's what I said, right? It still is ignoring rates. The sectors that don't care is still ignoring it, which is very strange. Very strange. Large caps don't care about interest rates as much as small caps. Yeah. No, man, I did not say that. They're gonna moon. Moon. with the chart that we had from yesterday, yeah. So yeah, it could have easily moved. I think some entities want to shit the whole market, take the thing, but yeah, you don't know. It's all this, but I wouldn't care. It felt like the other software just. I haven't been day trading. I don't day trade much. I don't day trade much, because like I think it's too much effort for most part for what you the risk you put in. You gotta be a very consistent trader, and you have to always be on your game. But today was so obvious because the semiconductors was open like right at the bottom of yesterday's range, right? So if you look at the chart, I can show you. Then that's it. Yeah. So that's why it's always like that. Yeah, you should. You should throw it in the bubble. Yes, you should. I'm deadly serious. I'm deadly serious. I'm deadly serious, man. I'm deadly serious. You should throw in the bubble because watch it scream up higher after Oracle, and you'll be like, "What the fuck is going on? Oracle's earning wasn't that good. How the hell is it going up another 20%?" And you're just like, "Whatever." Baffling. It really doesn't matter. That's how bubbles are. One down day and you think the whole world is over, and then the next 3 days everybody's back in the train in the gravy trade and buying all in again, going all in. Yeah, that's how bubbles work. I see. So yeah, this one, right? XBI, that makes sense. You go down on interest rates. That's what you do. Of course. So interest rates go up, you should be punished. All right. That's good. So this week, we're down 5.87%. But again, it is technology in a way, right? So then look at the other ones that are interest rates. XLU, was it? It's down 0.16%. It was up 0.93%. So if interest rates mattered, this one isn't showing it. ITB, home construction, down negative 0.17%, negative 0.51% today. So it's not showing up there. Real estate, the REITs, up 1.61%. So that Canadian must be very mad now. This Canadian guy is looking at this real estate going like, what the hell? Why is it even up this week? It was up 0.68% on Friday today. Okay, regional banks up 0.27% today, up 0.8% in the week. So that's kind of the problem, right? That's kind of the problem. I don't know what this means. So I'm just as confused as that Canadian right now. So I don't think that narrative makes sense. I think it was just because of the Koreans. I think it's just mainly the Koreans that popped this bubble. So Korea is down 14% this week. I think it's over for them. This is a very strong candle. I have a hard time believing the Koreans can pump this up immediately. They might be able to pump it up sometime down the line, but probably not now. If they all cashed out their like life insurance and all that, it's where's the new money coming from? Where's the new money gonna come from now? And then the Chinese 2 weeks ago blocked foreign investments from the Chinese. So anybody living in the Chinese mainland cannot buy foreign stocks through Hong Kong loopholes. So they did that for a reason. So the money stopped there. So they're not getting extra money from China and Hong Kong at the same rate they were. All the Koreans have cashed out all the excess money that they can to pump this up. I think there was some chart showing that Americans and other people were exiting the Korean market. So I don't think anybody outside of China and Hong Kong were trying to buy in, right? So yeah, right. That's it. So that's what I was saying. I was saying like, watch Korea. That's probably what's going to happen. So I think it's Korea, not the interest rates. Yeah, it's pretty much was Korea. And Korea was already weakening at the beginning of this week. You could see some weakness there building up. Like it was slowing down. It's starting to slow down. So it wouldn't take much to roll it over. So I think, yeah, it's just Korea and then Korea going into semiconductors because there's no more news from the semiconductors after this week. We already had Broadcom earnings. We already had the Expo over in Taiwan. So Nvidia, Microsoft, ARM already released their news at the beginning of the week. No more from them. Only thing left is Micron earnings. All right. So when you look at this, you're like, okay, here, these two areas, that's where you want to look for, right? Look for trouble because you got a lot of volume. This part, Wednesday, 27th. And then you start seeing increasing volume Wednesday right here, June 3rd. Okay. So these two levels. This and this are going to be where the important parts are. Let me just get rid of all this stuff here. So that's where I circled this area right here. Then we move down. So from the top of this week, let's say that's 12%. Okay. The last time we've had like those two events happen during October last year and then July of 2024, right? This was because of earnings. This was just because of earnings. Semiconductors went down 16%. So we're almost done here. So this is normal. Everything that we said was worrying about this condition, pop. So on Monday, if this thing goes down a little bit more, I'm buying other stocks. I'm not buying semiconductors per se. I'm just saying I'm going to buy other stocks. But this is semiconductors has been the leading sector since last April. And then the last time we had a big major crash from the Japanese yen unwind was back in 2024. You see this? This was 25%. That was a bigger drop in semiconductors. But, you know, that didn't affect the S&P 500 completely, right? So semiconductors went down 25% between July and August. But if you look at the S&P by itself, no, it affected that much because the semiconductors wasn't that big a portion of the S&P 500 then. Now it's a big portion. So you definitely don't want to see this thing drop 25% from this week's high, right? So during that same time, the S&P 500 dropped 10%, about 10%, close to 10% from top to bottom, while the semiconductors dropped 25%. So this time around, the semiconductors make about 40-something%, right, to 50% of the S&P 500 gains since March. You don't want to see this thing go too far. 10% to 15% is fine, right, of a drop. I think that should be what to be expected. Kevin Warsh can do the rest of the job. So if he wants to break this whole thing, this whole bubble, he can do that. He can do that if he wants in 2 weeks. But for now, yeah, that's all I'm expecting. That's all I'm expecting. So I could buy this stuff Monday morning, see what happens. If I get another 5-10% drop on semiconductors, what does that mean for the NASDAQ? Right? So today we dropped 2.58% on the S&P. The NASDAQ, I think we dropped like nearly 5%. You're not counting like the overnight futures, but let's say it's about 5%, right? 5%. So S&P 500, 2.5%. NASDAQ is about 5%, right? And this was with a negative nearly 11%, 10 to 11% on semiconductors right now. All right, so you see the proportionality that we're given here. So let's say the semiconductors drop another 10%. That's like another 2.5 on a S&P 500, another 5% on the NASDAQ. So it's a big component. You really don't want this guy to drop too much from here. Well, so now we can talk about like the stocks I was saying last time. So what did I say yesterday about Intel? I said if you want to buy Intel, it's probably going to do this, right? That's what one scenario I said. You got it. You got it today. You got it today. You got the down part. So assuming that Monday we go, I don't know how much lower we're going to go tomorrow. On Monday. So Monday, it might be that Sunday it starts recovering already. Like by the time pre-market happens, it's already recovered. Like the Koreans freak out Sunday afternoon, Sunday night, and then by Sunday, like Monday morning, early morning, it's just all gone. It could happen like that. You might not be able to catch a dip. But if it does drop further, watch what it does in the open. All right? See what it does in the open. Like these two areas are going to be important here. This, right? This candle's really important. This candle's really important. Okay? So around, let's say $99, okay, to 108. 99 to 108. How about that? Watch what it does in the 99 to 108 area. If it bounces back up here, you'll buy. As it's going back towards 108, you start buying it on the way back up. And then pray that it can just keep on moving up. I don't know. That's the only semiconductor I would say like maybe you want to go gamble with, okay? I don't know about the other ones. I would say Micron is going to be a lot more riskier. It still has earnings to report. Okay, so that's like late June, early July. I don't know if they even announced a date yet. Did they announce a date? Is it official? TradingView says June 24th. Okay, so I'll have to double check that. I'll have to double check that. I have a feeling it's going to get more damage though. I don't know if it's just going to bounce like this. I have a feeling it's just going to get stuck here and just go sideways again. I don't want to touch it if it's just going to go sideways. Intel going sideways is probably fine to me because it's been in its range. Okay, Micron had your chance. You had your chance, Micron. I said $1,000 is your target. It hit $1,000 and it came back. The next target is 1,200. But do I believe it's just gonna hit the top of this thing and just bounce? Oh, okay. You have to prove it. I can't go off of this right now. Intel looks like it has more of a chance. Intel's target is actually $180 to $200. That'll be the target for Intel. If you look at HUT, you remember what I said like about Oracle? Like you see, if you bought here, you don't care about this because it goes up, it goes to the top, back to the top of this, and then goes back. It's just retesting the top of the old range, right? If you bought here when it broke out of the range, now you're scared. You're really scared. You either sold today on a panic because at the end of a Friday, right, a lot of people start panicking because it's a weekend. They see it go down, and then you're below where you probably bought it if you wait for a breakout. That's why I don't like to buy assuming there's going to be a breakout. You buy at the bottom assuming it's going to be a failed breakdown. If you're bullish, you buy at the bottom of the range, not at the top of the range. If you're planning to short, you want to short like when it's at the top of the range and you want to go like, okay, I'll test it out and see if it's going to crash, then I'll just short up here, right? And that's what you would do. Yeah, so if let's say you want to short HUT, what you have to do is you're going to have to wait now to see what it does here to go down, because I doubt it's just going to just go straight through. I think all the charts we've seen so far of this area is a lot stronger than most everything else we've seen. So that you're going to have to prove next week. That's a lot more proof to make. Yeah. So I'm just going to be probably looking to buy some FR into leverage. So if I see it bounce up next week, this thing is just going, it's just like, okay, I'm taking out CIFR, normal shares, I'm going leverage. NBIS, maybe if I'm feeling good, right? Like this thing just, okay, leverage. So I'm just going to start switching out to leverage going into Oracle, right? So I'm going to see how it acts, it behaves. And if it does well after Oracle, yeah, okay, I might do that. I don't know. Depends on how much risk I want to take. So those are the top ones. Core Z. Yeah, I don't know which ones I'll do. I'll just do one or two others. I don't know. Maybe I'll do NBIS. Maybe I'll do Core Z, or I'll do CIFR. One of those. Yeah. Well, I'll do it for fun. Okay, so let's look at the space stocks, right? So yesterday after the close, and we had after hours. You had after hours. You didn't see anything happen on Planet Labs. It was only 2%. And then this morning, I don't know if I didn't check the news if there was specifically some article attacking Planet Labs or not. But somehow the market changed its mind and decided, well, 2% isn't good enough to go down. We got to push it down even further. So maybe it was just going down with the market. Who knows? But it went down 25% completely today to end over here, right? So would I want to buy this now or not? Right? That's what you would be asking. If you look at the weekly chart, the trend is still there. It's just touched this 18-week moving average. But the candle is huge, though. That's something you can't ignore. This candle is vicious. Okay, it's just like Bitcoin with the huge candle this week. You just can't ignore that. It could easily just do this sideways. So Bitcoin next week, it could just do that sideways. I wouldn't touch it. unless Bitcoin next week just has a big green candle towards the end, and this thing has a big green candle towards the end, okay, I'll change my mind, right? So if you're gonna plan to buy this on Monday, what you would have to do is do this. Whatever you do when you buy it, be very tight on your stop loss. Probably you're gonna have to be very tight, even though it's a very volatile stock by itself. I don't think you want to risk this thing collapsing on you during SpaceX IPO, right? You're just gonna have to assume that SpaceX IPO hype will at least drive this thing back up so you can make a trade through Thursday. Okay, that's a gamble. That's another gamble. So maybe Planet Labs and Oracle, I might put that as a trade. Those two guys, I might trade them from Monday to see what's up. You know, you could see. Maybe I can make it in 3 days, right? 3-4 days. It might be pretty good. So if you look at Oracle, it's like, yeah, this is fine still. Right? This area here is where all the trouble is, and we're still, even with the close today, we're still kind of at the top, right? So we didn't fully collapse back down to 190. I don't know, kind of looks good to me. I might do it. Even though there's earnings coming up, I might do that. I might do this one in Planet Labs, man. So, okay, maybe that'll be in my that'll be my first Substack trade gamble here. Okay, let's do some gambling. Okay, I'll put those two as the trades for next week. That'll be the trade for next week. Planet Labs and Oracle. How about that? Okay, let's look at Rocket Labs. So what I said yesterday, Rocket Labs, I said if the market is going down, if the market is viciously going down, we should hit $99.50, somewhere around here. Damn. So it's still, you know, it didn't drop that much. Like 8% is pretty normal for Rocket Labs on a normal day, right? Yeah, it's just this is pretty normal. Like, what the heck? So let's see what Monday brings. If this thing gets to 99, I'll just like with Intel, watch if it like bounces and starts rolling up in the morning on Monday morning. Okay? Or if the market doesn't even give you that chance, like the market in the futures market is already rolling back up in the European time, right? So after Asian market closes and the Europeans wake up and trade, and then by the time you see pre-market, you're like, well, looks like it's already recovering. Then you'll just have to buy up here. Then you just can't get that nice dip. So not a guarantee. Right there. So Rocket Lab is like Intel. So Rocket Lab will be like Intel. Oracle, maybe I'll play that like Planet Labs. Okay, Planet Labs, I'll play it like Oracle. So those two type of things. Let's see what the other ones. NIOD. So this candle is already reversed, right? So when we saw this, when I was talking about this stock yesterday, I was looking at this candle. I said, like, this is a strong candle. So you got to prove to me that it doesn't work anymore. And then we reverse down. We're back in the range. Okay, so you have to be careful here. You gotta be careful. So if Monday collapses, guess what? You can retest this easily, 90. Right? This could be a failed breakout, complete failed breakout. This is not what you want to see. So you break out of this range here, and then you just go back down and roll down. This is a failed breakout. So that's why, like, in the morning, you could say you could short this thing. You didn't need to short it like yesterday. You could have just shorted right at the open in the morning. So that's the same thing with semiconductors. That's why it's like that's a good day trade, at the very least. Okay. So this is a good example. So you look at yesterday, right? This was the low. The low of yesterday was 578 on SOXX. That was the low. You open at the low. You open at the low. Okay, you opened at the low. You open a short right there. You open the short right here, and then you would basically have a stop loss up here, about let's say you get the right price at the open. Your stop loss would be like 1% up, right? So if I was using the leverage short, a bear, that would be like 3% down. So then I would do this, right? I would have to go like, okay, I buy at 585 on SOXS, and 3% down would be about here at 567. So that would be my stop loss. And then I'll just let it run. I'll just let it run and do something else in the morning. All right. And then I'll double check it like within an hour or so, see what's up. Okay. So either I stop out, either this thing comes back down to $5.67. I'm out. So I lost 3%. But if it didn't and it kept going, then I would just inspect the chart again, right? I would just do that. That's basically what you should do, because if this thing didn't recover within an hour to 2 hours, you could just leave it there, keep going. The spot where you would probably think about selling is any price below here, because this was the significant bar set in Wednesday of May 27th. And if you didn't see nothing, you just keep going until you close at the close, right? If it kept going, that's what you do. So that's how you would do the day trade for that one. That, like, it's too easy. This thing is too easy. You're below the 2 moving averages. You're below this top of this significant bar, below the bottom of this level here where we gapped. We opened at the bottom of yesterday's low. All those things together means like, okay, today I short. I'll just do a day trade. Get what I mean? So that's when you like see something so obvious. You're just like, duh, this is easy. Then you could do it, right? So I just put in a little bit of money just for fun. I didn't put a lot of money into it. I didn't expect it just to go straight down like in one day, but that's great. It went straight down in one day. You made your money in one day. You don't have to worry about the weekend and the Monday. Then you're done. You're done with it. You can move on with your life. So that's basically what a quick trade would do. So perfect, right? So when the conditions are right, you can do a day trade. When the conditions are not right, it's harder to do a day trade, right? It's just a lot of times everything just happens within 15 minutes and then nothing happens the rest of the day. Like it's never this exciting. It's never exciting all the time. So that's why day trading is kind of annoying. A lot of times there's no conditions that make you want to day trade. When you're looking for stop levels, you look at weekly, daily, 75. I just look at the levels. Like the levels have nothing to do with or it shouldn't have to do too much with what time frame you're looking at, right? So the levels will be the most important thing. Now, when you're day trading, you're only probably going to look at the daily, the 78-minute, and then after I do the 78-minute, you can look at the 15-minute and the 3-minute. Okay, so you can look at those time frames. You're not going to be looking at like the weekly, monthly, quarterly. Yeah, you're not going to do that. Yeah, right? So you're going to be working in a different environment most of the time. But the levels, you should be able to map out at the beginning. So all of this is like you don't jump into a day trade just because X, Y, and Z, right? That has nothing to do with the strategy. The strategy is, first, you have to see a break in the trend. This was a break in the trend this morning. Yesterday was not a break in the trend, right? I can't tell you that this is bearish, really. I see this. This could be considered bearish if we close lower, but we closed at the top. So that was like kind of like a question mark. A lot of times when you see a candle like this in the morning where you just go like, you go open, you close, and you close back up, and you go nowhere, it's not confirmed. Okay? It's not confirmed. Some people will consider this bearish just because like you didn't go higher. So you didn't close higher. Just closing right at where you opened is, to me, it's not a good enough signal to be bearish. It's better if it just went like this and then it closed down below, right? Like halfway through this, it just closed below it. Maybe I would be like, that's bearish. That's bearish. Now, the next day, yesterday, you did this and then you went back up. Well, okay, if I took these two pictures together, is that bearish? Kind of, but still, that's not proof to me, right? You're above the moving averages. You're doing that. You are basically at the gap here between this and this, I suppose. If you consider this a gap, then yeah, okay. So what? That's not bearish. So see, that's why it's kind of like, no, this is hard to tell, right? You can't say like I'm gonna be bearish. No, that's not enough. If you looked at other things, maybe. If I looked at the S&P, it looks a lot different. So that same like candle on the SOXX was up here, right? And then you had this. But if you look at the S&P, it was actually a down day like that. That's bearish. That's bearish. But then the next day, yesterday, you went up and you did this. So it, like, wait a minute. So it's not bearish anymore? So you see, with the given information yesterday, I can't tell you to be bearish. I just can't. There's just not enough proof here. All you can do is wait for you break this. Okay, you break that, then you can be bearish. That's all you can do. That's all you can do. If I look at the NASDAQ, let's see what I see there. Probably a little bit more bearish than semiconductors, right? Okay, I see this. That's kind of like what we saw with the semiconductors, but instead we ended and closed down here. So that is more bearish, okay? That's kind of like we ended at halfway of this bar, this complete bar. Okay, so that could be considered bearish. We do this and this. Yeah, this is more bearish. This is way more bearish than the semiconductors and the S&P 500 if we looked at this. So then what would you say? You have 1 vote bear, 2 vote neutral bear. Not completely bear. So none of those charts would make me go like, yeah, I should short over here. like with confidence. I could try to short, right? Overnight, for sure. If I was shorting the futures, I would do it because the futures market, it was already rolling over. Then I would short it probably. So if you looked at the futures, you would see a different story because you could trade overnight and after hours with the futures, and you could see there's a difference, right? So this was yesterday's action, and then it started doing this, right? And then you go like, okay, and then all of a sudden, like, yeah, I would be looking like, why is it dangling at the bottom here? Okay, this was the bottom during the daytime yesterday, and we're just doing this sideways thing here. If I was playing futures, I could short it like pre-market, right? Before the market opened. Right there. I could have came in early. I could have came in like probably how many hours early? Let me get this to the hourly chart here. I could probably go 1, 2, 3. Yeah, I could have started shorting about 2 hours before the open down here on the NASDAQ. Okay. That's why people want the 24-hour market. They want the 24-hour market because then they can get the right price to trade. If you don't have the 24-hour market, you're kind of at a disadvantage, right? There you go. Right? I'm not pessimistic or optimistic. I'm always giving you all the sides. I'm giving you every scenario, right? I gave you the scenario for Intel yesterday. I said, if we go down, that's what I would do. And it looks like we are on our way to it, right? I didn't tell you it was going to do that or it wasn't going to do that. I said this or that, right? There you go. I give you scenarios. That's what I do. I always give you the scenarios. It's up to you to figure out what you want to do when that scenario does occur. You could either long Intel or not, right? So that's what I said when you asked about Intel yesterday. So did I expect it to happen? No, no, but it did happen. But I gave you the scenario. Yeah. On the NQ chart, you couldn't have told if you were scooping at the bottom until market open. That is correct. But you would have been able to short at a better spot than when you waited for the open. You know what I mean? You get what I'm saying? Because there's a real big difference. There's a real big difference shorting here than over here. Right? Because when you short here, you can set the stop loss up here. You know what I mean? And then you could just let it go. Everybody else had the short down here and they set their stop loss over here. You could have got shooken out. You could have got shook out and then, right? Like, look at this green candle in the middle of this whole thing. Like, somebody could have shorted and then they would have got shook out immediately within like the hour. So the entry, right? The entry matters. Like I told you, with the ranges, there's a big disadvantage when you enter here than over here. Yeah, you don't know it was gonna do that. But if you short the top of this range, it's a hell of a lot safer than shorting down here, right? Or down here. Like you could have easily got shook out before it kept going down. Yeah, that's the difference. That's the major difference. The entry really matters so much in the short-term trading like this. Really crazy. It could be. And that's why a lot of people, they give up on the day trading. Because, yeah, they just enter at the wrong spots. They get shaken out. They lose a lot of money because they keep getting in at the wrong time. And they keep their stop losses keep getting hit. And then they start screaming at the screen. Yeah, there's a whole bunch of people that just start like going crazy. They think everything is a conspiracy against them. Stop losses, the algorithms hunt for their stop loss, which could be true. Yeah, the algorithms are out there. They'll test levels. That's what they're doing. They're going around. They're trying to see who's the buyer and who's the seller at different levels. And if you get at the wrong spot with the crowd, they're gonna just stop. Like, they'll just start eliminating all your positions until it gets run out. So if you're with the crowd and the crowd is over here, then the algorithm is going to hunt, right? The algorithm is going to keep hunting until they flush you out before continuing the downtrend. Yeah. So that's why having the right position is always going to be important. Really important. Okay. Let's review the other stocks. I forgot to mention about ChargePoint. ChargePoint had earnings, and it had a really good candle yesterday. So let's see what it did today. To see what I think now. Would I get some junky stock like this? This is another area that will be like interest rate sensitive. This area here, the solar energy, renewable energy, wind, like all of them needs a lot of loans. So let me see. Man, I forgot what the ETF name. The TAN is one of them. There was other ETFs. Yeah, this one is sensitive to interest rates for sure. This one. Yep. This one. So it's down 13% this week. So we only have this one to confirm interest rates matter for now. Let's see. We got some room left to go further until the moving average and this range. I don't know, why did I draw this thing? What was this level? I guess this was important back 2022. Those were two bottoms. Okay, see if it gets down to 57 to 60. All right, so I'll be watching that. So ChargePoint. Okay, so this one I guess there's not going to be any short-term tradable thing. I think now it's just too broken now. with the ETF and all that. But let's see if it makes a range. Okay, here. Let's see if it makes a range here between 6 and 744. So I'll put all of this stuff on the list because I think the renewable energy and solar stuff might be going into play, because if the Democrats do take over in the next election cycles, the midterm and then the presidential in 2 years, then probably, yeah, get stocked up on all this renewable energy BS. They're probably going to go back to that. And if Kevin Warsh like lowers interest rates, yeah, the market might get hyped up for a lot of these stocks. So I'll be watching this one later, but it's not going to be important now. So no. I see nothing short term right now. No setups. I think this week pretty much destroyed that whole sector. Okay, net, back to net, Cloudflare. All right, very important here. Level right, 257. Okay, this is the same problem as INOD, right? This is a failed breakout. This looks like a failed breakout. So next week, you got to see something reverse. Otherwise, forget about it. This is going to crash. This is going to crash right back down into the range again. That's not good. All right. So, yeah. So if you're looking to buy something, INOD and net is probably the most risky ones to look at right now. Okay, let's look at DocN. This one still looks good. Shoot. Yeah. Damn it. Well, maybe Monday I might get a better deal. I don't know. This one looks good still. Fuck. That's strong. DocN is strong. All right. Air. How about air? Air. Okay. This one's right back into the range again. All right. So not sure. Right? This one's not sure. Okay. Let's see what happens Monday. Monday, you want to see something like this. Let's say it goes down with the market. It should go to the halfway point of this range and bounce and come back. That's what you want to see by Tuesday. So Monday, Tuesday, it should V like that. If it doesn't V like that, I wouldn't touch it. Okay, AOI. All right, let's see what that one gives us. AOI, is that still good for a potential trade? Yeah. Yeah, that's not bad. Still a green bar in the week. Kind of sucks that it didn't overtake this red bar here. So it would have been nicer if it was like a solid green bar all the way to the top, but it's still okay. This would be another interest rate sensitive place, right? AOI, a smaller version of the other big boys in the photonics laser stuff. This one, you would think like should have crashed harder. This one did though. ALMU did. Is this one more interest rate sensitive than AOI? Maybe. I don't know. The market probably thought this one sucked more. So ALMU, I don't know. I don't think so. Oh. Okay, that's it. So I think like my recommendations would be Planet Labs to trade, right? Intel, Oracle, like those three. Were those three the ones? Yeah, I'll have to review this video and see if I wanted to care about anything else. Yeah, you have to do everything. Yeah, you have to look at all the time frames. It gives you perspective. If you don't look at the thing, this is why Joe Rabel, that's the most important thing to learn from Joe Rabel, is the multiple time frames. A lot of people that you'll hear, they don't do multiple time frames. Joe Rabel and Rick Bensignor, those two guys, they like to do multiple time frames. You'll see a lot of traders, they don't like it. They think like if you do multiple time frames, you're a schizophrenic. Like Jake Bernstein really hates multiple time frames. He says like anybody looking at multiple time frames is a schizophrenic. But bro, when you look at things with multiple time frames, everything makes so much more sense. Just with moving average. If you just have a moving average, a simple moving average, 18, right? 18 everywhere, and you see the way it's just moving, It just makes so much more sense. Like we talked about McKesson. We talked about McKesson. The long term, it's intact, right? The long term is intact. We looked at the monthly. Long term, it's intact. So every time it hits this 18 monthly, you buy, you buy, you buy. That's a general attitude. Now, if we look at the weekly, what you see in the weekly, just like here, we have a big damage, right? Just like here, we have big damage. So, what would you do? What would you do? Okay, so that was the last time you had a little range before moving up. That was the bottom there. When was the last time you had a range? You had a range probably around here, right? You're making a bottom there. So it makes sense. Everything right now makes sense. Total sense. You had a range before you moved up to the next high. You go back to return to the top of that range. You had a range here. You move to the next high. You go back to the top of that range. So when you look at the monthly, you're not afraid. You look at the weekly, it makes sense. Okay. Then you go look at the daily. Okay, you look at the daily, you're trying to find like where would I be convinced that it's done staying at the bottom, right? Where will I be done with this whole area right here? That's what I would be looking for. Is this finished? Is this finished? Like from what I see on the daily, it looks like we closed very strong because like everybody ran away from semiconductors. I'm guessing perhaps they want to get ready to finish this off and go up here and build a new range, right? So it looks like it's safe to start planning out buys over this area because the earnings brought you down here. Now you're done with this. If the daily keeps moving up, then maybe we start moving further up. Maybe that's where we're going to go. So something's changing in the daily. So that's why if you look at the multiple time frames, yeah, it's a lot healthier. Definitely a lot healthier. So that's how you would do it. So you say, why would you have a true dip with a minor dip? Now you get it, right? Now you get it. I think once you have all these time frames, you really understand. So Rick Bensignor, he would do multiple time frames with the DeMark and the the mark and the what is it? Ichimoku cloud. He would do the same thing with those two. Joe Rabel, he would just do multiple times with the 18 and the 40 moving average, and then he'll just look at the MACD and the ADX. ADX, he changes the settings too. So yeah, you should go watch his videos out there. So once you see it, it makes a lot of sense. Makes a lot of sense. So yeah, so I could just do that with the SOXX if you need me to give you an example here. Like, let's look at the SOXX. Let's look at semiconductors. You have a long-term range, right? I think the monthly is kind of like way too far ahead. So let me get rid of all these drawings. All right, so this is very strong. So we're already moving far away from the moving average. We can't use this anymore. This is kind of like, oof, well, I see a bubble. Yeah, okay, it's a bubble. We got it. Okay, let's look at the weekly, right? Most of the time, since April, it went up, and then the last time we had a big crash was here through end of October into November, okay? We went in a range because of the Iran war. We went sideways, okay? But both of those times, you see, we went up, and then we went back down to the moving average. Here, we just hugged that moving average on the weekly. We just hugged it, right, before moving up to the next one. Now you see we're up here. Guess what? Do you want to buy a dip up here? What dip? I don't see a dip. I'm not close at all to the moving average. Why would I buy up here? This is not a place to buy. If I'm buying up here, it's just because it's just short term. Very short term trading, right? So let's say Intel goes to 200. It better go to 200 very quickly. Very quickly. I don't want to hang out when it's just going sideways for a long time because the whole sector itself is crazy expensive compared to the moving average. I'm not saying expensive in terms of fundamentals. Fundamentals, everybody can argue. I don't know. You guys can argue all day long. Micron is undervalued. Intel is undervalued. Blah, blah, blah. Overvalued, undervalued. I don't care. I don't care. You guys are crazy. All I care about is like where it is on the line. Like how far is it from the moving average, right? So if I look at the daily, you see this? You buy the dip. Here, you bought the dip back in May 19th. Here, you probably are going to buy the dip, right? So let me put back the drawings. You see? That's why this line is so important. This was the last top of the range here before we move to the next one. If you just retest on Monday, let's say on Monday we just go down a little bit, we start testing and we bounce back up, we're going to go a lot higher. Maybe, right? If that didn't happen, if today didn't happen and we just kept going up, then we would just be like, well, we got to wait for the next one. We got to wait for the next move because the moving averages are still going up. I can't tell you that's bearish. I can't tell you to short here, right? There's not enough evidence to be serious. If you're short, you got to have evidence, more evidence than just saying like it's too high. Just saying it's too high isn't enough evidence, right? So you get it now? Hopefully you got it. I think that's what it is. I'm using the standard deviation tool. Yeah, you could use that. Like, are you using the one where it's like you got the moving average here and then you just go like how many deviations away? Like this is like 1 deviation, 2 deviation. So you have a band. You have these bands. Right? Like there's Bollinger Bands. I know they have that. There's Keltner channels, Bollinger Bands. They'll give you some form of deviation, right? If you get too far away or something and you're just like, okay, I short now. Yeah, you could do that, I guess. It's not going to work all the time, though. You could stay from the deviation here and be like, well, okay, like this, I don't think this got so far away from the moving average. Like this one, maybe. This one, I don't know. That's kind of like iffy, right? Like you could say like, well, okay, yeah, maybe I'll take a chance shorting there. But yeah, that's not always guarantee. That's not always guarantee. Yeah, it shows like a 1, 2, and 3 above. Yeah, I know what you're talking about, I think. Yeah, there's different types. Yeah. The Bollinger Band, Keltner channels are like the most popular ones. And then there's people that are like, they do their own thing. They kind of like have variations on Bollinger and Keltner channels. Yeah. Yeah, that's right. You're gonna get myopic if you just look at one time frame. That's correct. Yeah, yep. And Joe Rabel said this, that. Let me get his channel. Let me get his channel. Joe Rabel. Let me get his channel. Let's see. Joe Rabel. Okay. All right. Yeah, and you can go to stock charts too and search his name, Joe Rabel. Yeah. It depends on which one you're using. I don't know which one you're using. But there's default settings. There's usually a default setting based on the creator. The creator of the indicator will give a default setting, and you start changing it like to however you want it to be. Yeah. Highland for e-car chargers. Okay. Let's see. Highland. Helion. Interesting looking chart. Okay. So there's another How many like electric charge companies are there? There should be a lot of them by now. I remember. I mean, Tesla was kind of like a proxy of getting like the charge. They would could charge with their network, and they would charge Ford and GM just for people to use their charge network or something. They got quite a bit of money from that. I don't know if they still do, but yeah. Because you're really reliant on these huge green candles that show up from time to time. Yeah, all right. Sure. Sure thing. Okay. Okay, so if we go 78 minute, damn, man. Man, if this is a rage, huh? I mean, that's very strong. That's a very strong chart, I would say, right? This would be like the Twilio and the other one, right? The band and Twilio, yeah. Like Twilio barely crashed today, that's strong. It's still holding up, Twilio. Maybe Twilio and Band are really the ones to get into, but Helion, bro, yeah. See, Band is even stronger than that Helion one, right? Okay, I'll put that on the list. Maybe these three will be part of the if you're crazy, why not type of trade right here. These might actually be the ones for the next 3 weeks. Fuck yeah, they look good. They definitely look good. Just based on technicals, I have no idea. I have no idea about like what happened here. Like what news came through here that made it go up. There's a lot of volume, right? This is pretty confident here. Somebody's really confident to keep it up. So you tell me, right? We had a big market drop. That's not bad, right? Yeah, I found Ban and Helion. Yeah, I mean, those charts are not... They look good. Maybe that's where I'm going to put my Fortinet and all that crap from selling today. Selling this week. That's where I'm going to put some of my money. If I want to keep trading for the coming 3 weeks, maybe these are the ones to look into. Yeah, that's it. Kurt Smock. Okay. I'll check that out. All right. I'll check this out. Okay. I'll look at his script. I don't know. I mean, they're gonna have to use somebody's original idea somewhere. Like there's no new idea in the sun most of the time. They're based off of somebody else's, I'm sure. Somebody else's, some variation of Keltner or Bollinger Band. So is there enough charge points? So I don't know too much. I don't follow it. So Helion, charge point, those two. Okay, let's see. There's a formulaic way to figure out whether real dip. Yeah, there's. Dude, if I really knew, I don't really know. But yeah, you should definitely check out Joe Rabel. Like he's very specific, okay, in how he wants you to buy. Okay, everything has to trigger. So go to that channel over there in this list, because for him, there's very specific things you want to see on a chart before you buy. Very specific. Let me see. Maybe there's an easy chart to practice with. Let's go back to McKesson. Okay, 78 minutes. So this is how it looks on the 78 minutes. So you got a nice range on the 78 minute. Okay, I see ya. All right. So let's say I just don't I don't look at the quarterly chart. Okay, quarterly chart right now looks terrible. I don't know how the quarter is going to end though. So we're just going to ignore it. But let's say we're ready to move up again. Okay. So if we look at this right now, there's two things that are a problem, right? Well, one thing that's a problem right now. This MACD, you see that it's already going down, right? We're already moving down below the signal line. That's one problem. The same thing happened over here. Same thing happened over here, but this one is a lot wider than this one. You see? So if we look at it, this break here, this thing is a lot wider, and also the blue line is going down a lot steeper. So this is a problem. This is gonna be a problem. This is kind of gonna make you go, well, okay, I'm hesitant to buy it. I'm gonna be more hesitant to buy it. But let's say I want to. All right. Okay, so then we got to go down here. So we're looking at the weekly. All right, so we look at the MACD this time around. If you're doing the Joe Rabel thing, and you're using the weekly to buy, then you're probably gonna stay safe, right? You won't buy until this improves. That means, like, when would you buy this thing? Really, like, that means you would buy during this candle here that week. And that was earnings. That was an earnings week. This time we already passed earnings. So how long will it take for this thing just to curl back up? A lot longer than here. So by the time this thing curls back up, you got to wait for this earnings in August. So you're going to have to wait a long time if you're basing off of this thing, right? The other problem too is it's below the moving averages now. So on the weekly side, you're not too confident. You have to break this moving average. You're gonna have to wait till here to buy it, probably, right? You're gonna have to wait until like it's comfortably over there to buy it. So that's kind of like why it's like, ooh, that's not a good place to buy in case like it just crashes, because that would be the place where they would push it up before continuing on the way down, right? So that's kind of like why I don't like that. So you see the problem right now that I'm having. It's not easy. It's not easy for you to figure out, is that the dip? Are you really sure that's a dip? No, you're not sure. You're really not sure. Now, if we look at the daily, I look at this. One place I could buy it would be like I would have to wait for it to get over the moving average and then go up it like this. I see the crossover here, but I do not see the moving average getting above the moving average, so I can't buy it there. I have to wait. I gotta keep waiting. Well, the last 2 days, yeah, I would buy, right? Finally, we got above. That's where I would buy. I see this, the moving average, I mean, the MACD is still going strong. We did this pinch. He would call this a pinch. This whole thing here, he would call this a pinch, because if I zoom in for you, you see that? It's like he calls it like a duck bill. So it's like, that's a pinch. Okay, I buy then. But here's the problem with that. Like, I missed out on buying down here. I could have just bought down here ahead of time before I got the confirmation, right? The other thing too is like sometimes maybe you want to wait for this green to get up like farther above here, right? So that's another problem. It takes a while. These are all lagging indicators. They just lag. You miss out on buying at a lower price because this thing could just go up here and then fail. It could just go back down. There's no proof that this thing has to go up. This could just trick you and go up here and fail. Yeah, that's the problem with that. So again, right? What can you do? If I look at the weekly, I gotta wait until earnings probably, and wait until I can buy up here, which might just be a false breakout and fail. So that's not good. Let's say I want to really try McKesson. I really want to try it. Then I would be buying right now, while it's still close to 724, right? Just to test it out. It might just do this and go back and go this, go back, go this. It might just go that, right? It might just do that. I don't have a crystal ball. But what I will say is, like, it's a very investable stock because on the monthly chart, it's great. So I would take a chance to buy it now, and then in a few weeks, come back later in a few weeks and see if anything changed. That's what I would do. That's basically what I would do. So you kind of get the idea, right? There's no way for me to tell you there's a systematic way to figure this out. It's just too hard. I think there's just no real way, and that's why I want to throw as much stuff as I can. I throw in the cycle stuff because I told you the cycle stuff said the best time for the market to move up was late March into early June. We're already in early June and we're already starting to have trouble. So the first initial move is over. Yeah, it's a pinch play. Yep. Yeah. The 1, 2, 3 where you draw the trend line. Yeah, you just watch the Joe Rabel videos, Eric. You gotta go watch them. So I gave you his channel, the link to his channel, so you can go. And yeah, Joe always publishes video. He'll repeat the same topic again and again, right? Because it's just like every time there's something on a chart, he'll just highlight it and he'll just show you. Yeah, because it's always about oh, you already subbed to it? Yeah. All you gotta do is watch over and over his videos. Then you'll know what's up. Because everything's the same. It's always the same. The same stuff again and again and again and again and again. Yeah. The 1, 2, 3 method can be done with indicate. Yeah, that's right. So yeah, I really recommend if you want to do something, you don't want to do with indicators. Indicators are always lagging. They just confirm what you already should know. You could already see it, already could see what's happening. And like I said, like if you just look at the monthly, right, you could see like this is bad. You had a green candle breakout with a red on the monthly. Like, yeah, that's pretty bad, man. And if I did the quarterly, right? If I did the quarterly, look at that. The quarter's not over yet. We still have one. We have to finish up this month. But let's say this is a big red candle. If this is a big red candle, right, it gets to the, it just extends a little bit further down. No, this is something bad is starting to happen. That's very significant. Right? Because you have to basically look at this side here, and you go like, well, that means next quarter is going to be more important to fix this, to repair this damage, and that's what's going to happen this time around, right? So if this thing goes real deep, deeper than what it did here, you're really worried then. You're really worried. It's over. It's basically over. So, yeah. So when you look at the higher time frame, you'll know this. So you got to look at all of them and then make your judgments. Okay? So yeah, bring out the cycle stuff. That's gonna help you out. That's why I brought up all the cycle stuff. Replace with this. Let's see. Okay, let me see. All right. Okay, so that's why we gotta look at the cycle stuff too. Right? Look at the semiconductors right now. This can help you if it's a real dip or not, too. Right? When would I buy semiconductor stocks? Like, seriously, not like for a quick trade. Like something I could hold for a few months, Something that could potentially I could hold for a few months. Well, the next place would be July. That's what it's saying here. All right? It doesn't mean like we're going to go down from now into July. It just means like the chances of us going up is now a lot lower. We're probably going sideways at the very minimum. So that's why I said in the title of this stream, we're probably going sideways. Yeah, we probably are going sideways. It's going to suck. It's going to suck. And we're stopped going sideways in July. And then we probably trick people into September. Like we think like, oh, August, September, everybody's going back to semiconductors again before the big crash into November midterms. So for now, I think the what you could expect right now is to go sideways. If you look at the DeMark, right, for the 78 minutes, we did a lot of damage compared to the last time we went down during the options. So I have a hard time believing we can just go back up this time around. Very hard time to believe. I think we're just going to go sideways. I think the semiconductors are out of the game. They're just out of the game. They won't help the index go up. Okay? At the very least, it doesn't crash too much further down to keep it going sideways. But yeah, that means the S&P 500 is probably going sideways. Okay? That's probably what's going to happen. People are going to start rotating their money to something else from these the semiconductors. So what else we got here? This is the S&P 500. I showed you this in the thumbnail. It's in the thumbnail, right? It's in the thumbnail up here. But here's a bigger version. So I put 3 cycles on top. There's a 200-day cycle, 126-day cycle, 80-day cycle. The 80 and 200, those two are probably the most important ones. Those are probably the most important ones. But I've tossed in the 126 this time because like I see like it's pretty strong. It looks fairly strong, so I'll add it. So I have 3 over here. This one says we're going down till October. Okay. What's likely what this means is that we're going to go sideways to this little inflection kind of like in August before going down. So what probably this would mean is like we go sideways into August, and then August, September, we get tricked. We get a little tricked over there before crashing. So I think that's what I would expect. That's what I would expect. It doesn't go down in one straight line. It just tries to goof off in August, where it's like it tricks you to thinking it's gonna go up into September. Then something happens in September, you go back down to October, November. That's probably doesn't mean it's going to happen like that. I just telling you what the cycles are saying. This is like you talk about the trend is the wind in your back. This thing is in the wind in their back too. Yeah, right. The cycles are the wind in your back. Right now, the wind is going to disappear. There's going to be no more trade winds. All right. So if you're sailing your ship, it's disappearing. It's about to go away. My minor Johnson Johnson went up. Yes. So Johnson Johnson, McKesson, all those went up because people are trying to run into safe places to be in the stock market. Healthcare is the place to be when you think a recession's about to happen. You're going to go to healthcare. So that's probably what the algorithms were going for today. They were like, well, we were selling a lot of these healthcare stocks. We'll just try to go back into them. Yeah. Is it good dumping or hold tight? So Monday will be the next dump probably. The Koreans are going to panic, built to spill. They're going to panic overnight, I'm guessing, on Sunday. And then by Monday morning, if it doesn't recover by the European time, we'll have one more day of red. And that's where I'm going to buy whatever quick trade stuff I'm going to decide. I'm just going to buy. But if you have, but I wouldn't buy something thinking it would just go back up. Like the market would just easily go back up. So what I'm saying is like anything you have, you just hold. Anything you want to buy, don't do it. Don't do it just yet. Yeah, this is not going to be the safe time to do it. That's just going to be for a quick trade. Just something for a week or two. Okay? Yeah, nothing important. Nothing that I'm going to say like, yeah, this is going to be great for 3 months. No. Nope. I'm going to wait till August. August is when you'll be thinking about buying. Okay? August, September. That's when you plan to buy something. Because the real dip will probably be coming in October. Okay? So August, September, we'll probably look at the lithium, the oil companies again, like a lot of material space stuff, and we'll go from there. Yeah, but Anything else is just trading now. Anything you hold right now, you just hold it. Yeah, you're just gonna hold it for another 2 weeks, 3 weeks, and we'll decide then. Okay, so CIFR. All right, so I like this point and figure. So you know the DeMark, what it said for CIFR? DeMark said 40. So you got 45 to 50. That's good. That's pretty close. So I like this point and figure here. I like this point and figure. Okay. So I like these targets. So let's see what happens next week. You know, I might just maybe I'll just get leverage CIFR. I'll just replace my CIFR with leverage. How about that? This is a nice move, right? This will be like 20 to 45. Okay, 20 to 40 or 20 to 45. So let's see what did it close at? Did it close at 23 or something today? CIFR. Yeah, 23, almost 23. So 22.45, negative 12% today. So if Monday it dips to 20, oh man, yeah, I'll go for it, dude. I'll go for it for sure because DeMark says 40 at least. So that's 100%. Leverage that up, that's 200% potential. I'm not saying it's going to go there, right? None of us are going to say it's going to go there. All this says is like there's a potential that it could, CIFR could go this high. So that's a good bet. That's a good bet. Okay, I'll go for that. Oh, cool. Anything you need at the bottom of the Maslow pyramid to live is up 5% or more. Yep. Yep, it's 5% or more. Yeah, that's correct. Yeah, chill. Just chill. Don't worry. I got to try to break even from last time. Oh, okay. You got some? Cool. Yeah. That's a good price anyway. That's a good price. I don't think. How much lower can it go by Monday? I don't know, but if it does, just buy more. Shows a percent increase on the bar chart below the PNF, 93%. Yeah. Okay. Yeah, I see you put like the selling climax, the last point of supply. That's great. Yeah, you're doing the Wyckoff stuff right here. Yeah. I think if you just do the multi-time frame, the Wyckoff stuff, add in a little DeMark, Ichimoku cloud, right? On top of that, and then the cycles, like you add a little bit of the cycle stuff. If we could just make it all work together, then you'll be more confident on when to buy the dip, right? So as long as you saw this moving up from late March into July, it would have been like buy the dip. And then now, I mean, yeah, now we're getting into June and it's like it's starting to roll over. It's like June to July, you're like, okay. Now I have to be more cautious. I'm not really gonna buy everybody's dip. It has to be very selective in which dip, right? When we were going up here, it was, yeah, anybody you bought was probably okay. Kind of the same attitude we got last April. Yeah, last April. Now, if you look at the bottom here, this is the RSI stuff. So this is a cyclic RSI. You see, it's the red line is just bouncing on top of the blue. So this top blue and bottom blue act like the little ranges that adjust. So when we had our little trouble with the Iran, you could see like before that, many months before that, we were already getting weaker and weaker because we had a hard time getting back to the top blue line. We were staying at the bottom blue, right? Before we just fell, it completely fell over in March. So the weakness was already building up there. This time, we could just like keep on going sideways, like here in July to October, right? In this red line. And that coincided with this move up here. Now, let me go back to the chart. So. Okay, so this monthly chart, let me put back SPX. I'll put the SPX here. Okay, now let's look at the monthly chart. If we look at the monthly chart on the S&P, You know, this is what I drew. This is what I drew at the beginning of this year. I said we're gonna go crash and go up like this. Okay, that didn't happen, right? That did not happen. Okay, okay, so that wasn't true. It was close. It kind of looked like it was about to do that, but it didn't happen. Okay, so if we look at the weekly, that looks pretty bad, right? This is the biggest red bar we've had since the Iran war. So this is going to stop us. We have to go sideways now. You cannot work this off unless next week is a big red bar, a big green bar to reverse it. So we know that, hey, this is significant. We're probably going sideways for the S&P 500. That doesn't mean like some stocks won't continue to go up, right? We already picked out a few stocks that looked like it was really good, like Twilio, Band, and we have a new one, Helion, right? So it's like, wait a minute, there's some stocks that look pretty good. Shit. So let me get rid of this. Let me get rid of this. Oh, actually, no. I just want to get rid of the indicators. How about the indicators? I just want to get rid of the indicators, okay? And then I'm gonna zoom in, and we're gonna draw stuff here. Okay, let me get my channels here. Okay, so this is what we see from April. Okay, April here, April there. Now let me once again, let's move in a little deeper. But like we are just in this range. We're just in this range. Now we're well extended though, right? We're getting really far ahead of ourselves. So if you took your little indicator with the standard deviations, I bet if you do it on the weekly chart like this, you would see like, wait a minute, or monthly chart, weekly or monthly. I don't know which one would be best for that. You would probably say like, let's do the monthly. Let's assume it's a monthly. Then we are way further ahead, right? We are way further ahead. Like kind of like here. This was just before the 2022 push down. Now we're just dangling up here. You could possibly say like, whatever's going to happen in September, October is going to be pretty bad, right? That's the potential. Maybe. So watch what happens. It could be pretty bad. Yeah. So we're just gonna go sideways for a little bit before bloop. Just like here, we just go like, okay, we got a little dip. We got one more break, move up, and then we just start moving down like that towards the middle. If that happens, yeah, then this 6,000 will come back into play, right? Going from here to 6,000 is scary because you're way up here. If you were down here going to 6,000, the market wouldn't have. Probably would have been like, whatever, who cares? Okay, so that's something to worry about. Okay, now let's go to the daily. Let's go to the daily this time. Okay. I think this is pretty clear. This was the first move up. This was the first leg up, basically, right? This was the most aggressive, the most vertical of the moves, right? All the way into April 17th. After that, it was just semiconductors moving everything up. This one, everything was moving up. The software, the semiconductors, some of the other like names, right? But after that, it was all semiconductors. So when that happened, it starts slowing down. Like here, it's slower, right? This is slower. That's a slower move up. We got a little bit more move up here, but not much. You could already see it slowing down. And then the next one moving up here, so if you measured out all the slopes, right? Let's look at the slopes of these things. This was the most aggressive one. And then here it's just slowing down. And then now you got this you got this huge red candle here. You're just like, what? Okay, that's it. It's done. We're over. No more. Once you have one big red candle like that, you know you're done. You're done with this move. Whatever this move was, it's done with. Okay, so that will give you a hit right there. Now, if you look at the Nasdaq or semiconductors by themselves, so let me give you this one. Okay, I don't want all the drawings up here again. Okay, let's just do this one. SOX. Okay, you see here. Okay, this one. Very strong, right? You can see it very clearly. This swing went all. Now we're slowing down. We're finally slowing down here. All right. I think the Koreans are down over here, right? They completely crashed. I think the Koreans are all the way back to here, this level. Let me see. So, yeah, they will be at that level on Monday. So we don't know yet. Yeah, we don't know yet. They will be. They will be down here. They will be somewhere back here. This will be painful for them. That's gonna be a lot of pain. Yeah. So, anyhow, so I think you can see the trend here. We're slowing down. We're definitely slowing down. This is a slowdown. You can't recover from this that quickly. Sorry. So don't expect a V move up from here, and this will save the S&P. We're gonna go sideways. All right, we're gonna go sideways. We're gonna keep going sideways. That's how it's gonna be. Yeah. Do you all sell off HUT? No. HUT. Well, I mean, it depends on where you bought HUT, right? So let me get this. So I bought down here, so I'm cool with whatever. You could have took profits along once it like got far away from the range, but no, this is fine. This is fine because, like I said, like it's like an Oracle type of thing, right? Like here, you got Oracle. You see, it did the same thing over here. This is pretty common. This is not something that doesn't happen like infrequently. This is actually very common. What's really unusual is when you have a bubble market, people are too used to having like something like a Palo Alto Networks or a what? Man, what is it? Man, Strike, Cloud Strike, Cloud, or whatever. Man, I keep forgetting the name. Man, they all have Cloud Flare and Cloud this and that. No, it's Crowd Strike, right? Yeah. So you see this? You buy at the bottom of the range, you're okay, right? You're okay. And then what happens is it goes up and it tests the breakout point here before continuing on higher. So yeah, HUT. You're gonna have to assume that HUT is going to do the same thing, unless next week is a massacre before SpaceX. But yeah, you do the range, you break out of the range, you retest the top, and then you continue on up. That's usually how it goes. That's normal. If you do Palo Alto Networks or the CrowdStrike stuff, you didn't see that, right? You broke out and you just kept flying. So this is abnormal. This is abnormal. This is really abnormal. So you see the resistance at the bottom here, okay? So then you just break out. You don't even test this thing again. You just keep on going. This is insanity. So I'm guessing a lot of people just kept shorting this thing because of the AI stuff. They said AI was going to take over their business. Just like CrowdStrike, but yeah, this is not normal. This thing. So if you zoom in here, like I guess I have to go to 78 minutes. Okay, I could go to 78 minutes. Like this thing. This is a range, right? So it should have tested this again before going up. It didn't even do that. This thing just kept going up. So this is abnormal. That's why it's a bubble market. That's why I say it's a bubble market. It's a bubble market because what you think like should happen in a normal market is no longer happening. All the time, all of a sudden you just start seeing weird stuff like Intel and Texas Instruments and all this, or STM. You're just like, what? You just go up and then you just keep flying. That makes no sense. No test. Nothing tested, right? Here you have earnings on STM right here. You probably thought like it would have tested it by now. No, you didn't do that. You just kept going up. after that. You just broke out and you just kept going in a straight line. No. So this is not normal. This is not what you normally see. You would see it zigzag, zigzag at the top of everything. So HUT, that's normal. That's exactly what you want to see, which sucks. That means the bubble market stuff is kind of disappeared today, right? That means like this week in general, late this week, all the bubble like symptoms or physiognomy, I guess you want to say, the bubble physiognomy is disappearing. You're starting to see the market start acting like it should. When it breaks out, you retest the level before you continue on is kind of like what you normally would see. This whole thing of just moving up. Yeah, example of 1, 2, 3. Right. That's exactly what it is. It should do a 1, 2, 3. An ABC, a 1, 2, 3. Exactly. That's what it should be doing. We don't see that in a bubble market. Everything just goes in a straight line. Weird. But it's fine if you want to get something quickly. Yeah. That's why that's the normal thing. Yeah. Okay, so hopefully you understand a bit of that. Okay, there you go. What other charts I gotta go before I'm done? Oracle, we did the NIOD. Good. Okay, we covered everything. Net cloud. Okay, guys, it's 2 hours. I think I covered what I needed to cover. I'm going to have to go back and review this video because I said Planet Labs, Oracle looked like fun trades. Intel looked like a fun trade. I don't know if any of that will be true, but yeah, sure, go for it. Oh, Rocket Lab too, right? Rocket Lab, let's go for it. Just do all those. Maybe even INOD or something if I decide to, but probably not. But they're probably going to be stocks that we want to go look for next week to trade on the bottom of Monday. So whatever's happening on Monday, you get the Monday. I'm looking to buy the dip, yeah, or converting everything into leverage. If I feel like taking a risk. But all right, guys, have a good weekend. I'll see you then. Prepare for the Koreans to panic. Koreans, if they panic hard, we should have a very big dip by the Monday